Yesterday, the market ignored the final services PMI data from the euro area and its member states. Services activity improved, although the indicators mostly remained below the 50-point mark that separates expansion from the contraction. The Eurozone Services PMI was revised higher to 50.2 in February 2024 from a preliminary reading of 50, indicating the first expansion in the services sector in several months, albeit a small one. However, the euro showed no reaction. The UK Services PMI was revised lower to 53.8 in February 2024, down from a preliminary estimate of 54.3 and January's 54.3. Against this background, the British pound dipped slightly but then managed to recover. The focus of market participants was on similar data from the United States, showing that US services industry growth slowed a bit in February. The ISM said its services PMI slipped to 52.6 last month from the 53.4 in January, below market expectations. Weak US data helped the euro and the pound sterling extend gains against the greenback. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes data on Germany's trade balance, the UK construction PMI, as well as retail sales in the euro area. Traders may also take notice of Britain's spring budget, which is likely to increase market volatility. Furthermore, it's worth paying attention to the ADP National Employment Report. US private sector employment is estimated to have increased by 149,000 jobs in February compared to 107,000 jobs in January. In addition, Fed Chair Jerome Powell is set to speak today. Considering the upcoming Fed meeting, his speech is of crucial importance to traders. Comments on the need to keep interest rate high are expected to support the US dollar, with the euro and the British pound coming under pressure. If Powell signals a dovish pivot, the greenback will suffer heavy losses, with the risky assets extending gains. Now let's consider the market situation from the technical point of view. Yesterday, the euro-dollar pair attempted to get out of the sideways channel, breaking above the new resistance level of 1.0876. Today, a rise followed by a false breakout at 1.0876 will create a sell signal, thus dragging the euro down to 1.0835. If the price forms a false breakout at this level, a buy signal will be generated, with the European currency coming back to 1.0876. If the price breaks through and consolidates above this mark amid Powell's dovish comments, the volume of long positions will increase. In this case, the euro will climb to 1.0905 and even 1.0931. At the level of 1.0931, I recommend going short on the rebound to catch an intraday correction of 20-25 pips. Short positions at 1.0905 and 1.0876 can be considered only amid a false breakout. In a bear case scenario, if the price slides to 1.0835 and breaks below it amid Powell's hawkish remarks and upbeat data on US private sector unemployment, a strong sell signal will be generated. Thus, the euro will return to the level of 1.0800, at which it would be a wise decision to go long on a rebound, counting on an intraday correction of 25-30 pips. The next major support lies at the level of 1.0773, at which it is also possible to open long positions on a rebound. As for the British pound, a false breakout at 1.2690 following the release of Britain's spring budget will create a strong buy signal. In this case, sterling will likely rise to 1.2730. If the price breaks above this level, the way to 1.2769 and 1.2797 will open. At the mark of 1.2797, traders are recommended to go short on the rebound to catch an intraday correction of 25-30 pips. Short positions at 1.2769 and 1.2730 can be opened amid a false breakout. If Powell leaves hawkish comments, bears may regain control of the market at 1.2690. If the price tests this level from the bottom up, the British pound will face a sell-off, diving to 1.2663 and probably 1.2636. At the level of 1.2636, it will be possible to go long on a rebound, expecting a 25-30 pip move. Going long at 1.2663 and 1.2690 will be relevant only in the event of a false breakout. Best of luck.